Welcome to another episode of The Citizen Exclusive. You are with me, your host, Mpoki Thompson, managing editor for The Citizen newspaper. In this episode, we'll be talking about banking and the financial sector in Tanzania. And our guest today is the CEO of StanChart Bank Tanzania, Herman Kasekende. Herman recently took over leadership of StanChart Bank, and he'll be talking about his role as the CEO and also the role that the bank plays in the financial sector in Tanzania. Herman, welcome to The Citizen. Welcome to Mwananchi Digital. Congratulations. You are the CEO of StanChart Bank. I mean, that's a very, very big role, considering the role that the bank plays in the financial sector in Tanzania. You have served as the CEO of StanChart Bank in Uganda, Zambia, and now you're in Tanzania. So you have quite the experience as a banking executive. Can you talk about some of the priorities now that you're leading the Tanzanian chapter of?
Thanks again for having me. StanChart Bank has got quite a deep history in this bank that almost dates more than 100 years. We are committed to this market. We are committed to Africa. And if you follow the developments around the bank, our strength is actually mainly Africa, Middle East, and Asia. So we're very proud of the impact we have in Africa, but most importantly here, back where we are, in Tanzania. Now, in terms of our strategic priorities, or what you might refer to as the strategic or the strategies of for the bank, we are consistent. We are a global bank, and we are a subsidiary of the Standard Chartered Bank Group. So strategic priority number one is actually to leverage the network. Remember, I talked about our strength being in Africa, Middle East, and Asia. But we also listed in the UK and Hong Kong. And what we do very well is actually to deliver that network to our clients, mainly the corporate and institutional banking clients. So a lot of our clients, or what you call the network names, do bank with us because of the presence we have in Asia, in Africa, and the Middle East. And that delivers immense value to the bank. So that is strategic priority number one, to make sure that I work with the local team to leverage that network. There's business that we get from other group subsidiaries because of our presence in Tanzania. But we've also got business that we actually throw to the other parts of the bank. And that in total makes up what we call the network revenues. So it is to ensure that we maximize the value of the network. The next strategic priority is about digitizing our operations. That capability to deliver that network the way it is, spanning all the way from Asia, Middle East, and Africa, and here in Tanzania, is enabled because of our digital capabilities. So we want to make sure that we invest a lot more in digital, and we would like to make sure that we migrate a lot more of our operations and our transactions to the digital channels. Right now, where we are, close to about 95 to 96% of our transactions are actually done on digital. And there are several platforms, but I think here, something that we're going to take forward is mainly the platform that we give to our corporate clients, so that they reach us, we reach them 24 hours from the comfort of their homes or even offices. So for us, that is very, very critical to ensure that we migrate a lot more, and then we'll be able to offer them a lot more on those platforms that we offer. Then the other one is about sustainability. I think it goes without saying that this is now a topical thing, and we've taken some bold stands with regard to sustainability, or climate change, if you may want to call it that. So we've actually taken, as an institution, steps to say we will accelerate to net zero in our own operations, and we've actually had to come out and announce benchmarks in terms of what we'll achieve. That we'll achieve net zero in terms of carbon emissions by 2030. But we've also got a stepped up kind of ambition to assist our clients to ensure that not only our operations, but also the business that we do is net zero in terms of the carbon emissions by 2050. So that has come with a number of commitments along the way, ceasing to take up any new coal-powered plants and a lot of others. So that is something that we want to take forward in Tanzania, but not only in Tanzania, but the rest of the group. In terms of the readiness to sustainability, we are at different levels as players in the financial industry, but also some of the stakeholders that we work with. I'm happy to note that our key regulator, which is the Bank of Tanzania, is actually committed and aligned to the ambitions for sustainability. They've come up with a framework and they've been working with the Tanzania Bankers Association so that they bring all the players up at the same time. And we've participated in these efforts. And I think there will be regulations and policies that will ensure that we are all on the same page with regard to sustainability. But in addition to that, we're working with the Ministry of Finance to come up with the Sustainable Finance Framework, which will enable the country to take advantage of some better priced financing, okay, which is available in the debt and capital markets, okay, but it has to be aligned to sustainable finance or to the sustainable finance principles. So we are glad to be working with the ministry on that, and I'm pretty sure that this assignment should be done by probably the beginning of next year.
No, perfect. Now, I'm hearing a lot about your strongest areas being Africa, Asia. Now, recently, StanChart Bank, as a group, is scaling down its presence in Africa, and it has exited some markets. In Tanzania, you're still in operation, but you will do away with retail banking and focus on corporate institutional banking.
Yes.
Now, we're seeing good performance. You're talking about great prospects for the bank and its role here in the Tanzanians, specifically in Tanzania. But what has necessitated this shift? What has necessitated you doing away with some of the services that you're offering, and how will that impact? So just give us a bit of an understanding of a bit of a history why you had to make that decision as a bank.
Okay. So that's a very good question, and I think it gives me a good opportunity to kind of put context to the announcements that we made in April of this year. So one, I started by saying that Standard Chartered Bank is committed to Africa, okay? When you look at the growth prospects globally, in terms of resources, in terms of population dynamics, in terms of adoption of technology, Africa provides huge potential going forward. Now, I also said that our history in Tanzania dates back probably more than 100 years. And in some of our markets, it actually goes back 150 years. Along the way, and one thing that has enabled us to stay continuously in Africa in most of our markets is the rebalancing of the portfolios, rebalancing of what we do in terms of our priorities. Now, I think it's important for everybody to note that we will only do things where we believe we've got scale, okay, where we think we've got the scope to take this business forward, but also where we are committed to continue investing, okay? So the impact we have on the market in Tanzania is undeniable. And I think it is important for everybody to view Standard Chartered Bank from the lens of what impact the government or actually we've got on the economy in Tanzania. Now, there are a number of ways that we impact the economy and the communities where we do business. There are some flagship projects which we have undertaken, and I think the biggest, which is now in public, is the standard gauge rail. We're mandated by the government to mobilize funding to ensure that Tanzania builds a standard gauge rail. And that started with Lot 1 and Lot 2. We are happy to continue working with the government to the extent that we're mandated again to mobilize the funding for lot 3, 4, and 5. For us, we are very proud of the impact we have, because think about how life-changing that project is going to be. We're talking about billions of dollars, which could not have been funded, easily funded, just by the financial institutions in Tanzania. So what do we bring to the market? We bring that bridge between Tanzania and the debt and capital markets. Those pockets, huge pockets of capital, and convincing them to come and invest in Tanzania. So for me, I want everybody to look at the impact from that, impact we have, the impact of Standard Chartered Bank in Tanzania. But you will also note that, or you have to note that we are the biggest dollar clearing bank in Tanzania. What does that mean? That when you look at the local banks here, we clear for 60%. What does that mean? That we take them to the dollar markets like New York. If somebody needs to do trade, clear a letter of credit, do a telegraphic transfer, you need to go through through New York. And the bank that takes you to that clearing is actually Standard Chartered Bank. Okay? So we enable dollar clearing, we enable trade for Tanzania.
You exiting retail banking,
yes.
You're talking about these are the roles that the bank is playing, which is understandable.
Yes.
But now I want us to focus more on how this shift will impact your operations in Tanzania. Does it mean that now, as a group, Standard Chartered decided to reassess its presence in Tanzania? Because literature has it that most banks are exiting the African market due to fears of risk and capital burden. Now, yes, we understand the role that Standard Chartered is playing, you know, the SGR and all these other wider corporate banking, but specifically on exiting retail banking and how it's going to impact the people
operations
who are
of the bank.
banking here in Tanzania.
I think I wanted to give you the context of whether the bank is committed to Tanzania. And I think that is not questionable. It's in no doubt that we are committed and we believe in the prospects for Tanzania in terms of growth. When you look at East Africa, when you look at Africa, one of the best performing markets is actually Tanzania in terms of the fundamentals, whether you're talking about GDP growth, talking about inflation, whether you talk about the stability of the exchange rates, whether you're talking about interest rates, okay, and reserves. So that goes without any doubt. And recently the country was actually upgraded by Moody's. So going back to our participation, like I said, that every now and then we rebalance our participation. Okay, we are strong, like I said, in Asia, Africa, and the Middle East. Every now and then we have to rebalance to see where we can make the most impact. Okay, so if we don't believe that we've got the scale to invest well enough to support our clients in terms of digital, in terms of their ambitions, then we are better off concentrating on what we do very well. That is what we do. I have no doubt that there are enough banks actually to support the retail business in Tanzania. Sophisticated digital platforms, number of products, probably a few more introductions, some of the things that local banks may struggle in terms of the wealth management offering proposition, which is something we do very well in other markets. Probably that's something that may lack at the end of the day because of our exit of the retail, but we are ready to work with other banks like we do in many other respects to make sure that such propositions are brought to the market because there's demand for it.
So in terms of the contribution of retail banking in the revenue for the bank, how will that exit impact your revenues? And what was the contribution in terms of percentage?
Good question. Good question, and I'm happy to talk about the segmentation of our business. In terms of, I'll stick to the profit and loss, the contribution on that. In terms of the top line, which is the revenues, the corporate and institutional banking, commercial corporate and institutional banking, because we have two major segments in our business. CCIB, which is the commercial, corporate and institutional banking, and then the retail, which is CPBB. CCIB, which is the corporate, contributes about 86% of the top line of the revenues of the bank, and the balance is contributed by the retail. Okay, like you asked. And in terms of the bottom line, actually, the CCIB, which is the corporate and institutional banking, that's the bottom line, which is the profit, operating profit, contributes even a bigger share, close to 97%. Okay, so that is the contribution of retail. Okay, not that the retail business loses us money. We are happy with the performance and whatever, but we can do a lot more by concentrating on what we do very well. Okay, now there's a lot of talk about this exit and whichever, but the underlying principle in terms of who we will choose to partner with or to sell the portfolio, the overarching objective is to ensure that we have got the best outcomes for our clients. Number one, what is that transition? What kind of propositions, what kind of capabilities as any bidder has got? Number two, our people. Okay, what kind of proposition has somebody got for our people? Will they be taking our people, and what kind of packages will they be given, and all that? That is going to be, those are the top two. And of course, number three, whoever we want to sell the portfolio to has got to be approved by the central bank. We are a key contributor to the financial industry, and we are working very well together with the central bank to ensure that those two, the top two overarching objectives, are delivered.
Okay. So what you're telling me is that this transition is not just going to impact those who are banking with you on the retail scale, but also in terms of the people that you've employed who are working on that, they're also going to be impacted.
Yes.
Yeah. So the proposition that you're looking at is which bank that maybe you sell that portfolio to will not only take the retail customers, but also the people who are handling that docket. Is that what you're trying to do? So that to avoid any job losses.
Yes.
So you're saying that there's not going to be any.
That's an overarching objective.
Okay. So there's not going to be any job loss.
Yeah. And what I want to stress here, that we will, and we are known for our record in the market, is that we will always deliver more than what the law requires us to do in terms of the treatment of our people. Okay? Not only, even when we have to exit staff, we treat them with dignity. Okay? But even in the transition and in the BA, what they call the business as usual, the training we give to staff, to our people in this market is unmatched. And I think if you follow the developments, when you look at the top management or the senior management of most of the financial institutions in Tanzania, you'll always find somebody with a green and blue somewhere. I'll not mention names, but I think our record is very clear. We will train our people and we'll make sure that they're future ready in terms of taking up opportunities that may be available in the market.
Okay, so just for clarity, how long will this process take, the transition, until everything is settled?
You know what, I cannot give dates at this point in time. The progress is very good on our side internally, but remember, we have a key stakeholder to work with, and that is the Bank of Tanzania. So we will work with them, we'll work with them in the process. There are a few things, there are certain boxes that we have to tick. They've communicated to us in terms of the imperatives, okay? And we have to make sure that all the boxes are ticked. So I think for me, the overarching objective is the outcome, which is for our people and our clients. And then we'll worry about the time that this is going to take.
So are there any banks that have shown interest?
There are bidders. There are people who have shown interest at this point in time. It's early in the day, but I think we should give it time, and at the appropriate time, we'll come to the market.
Okay, perfect. Now let's talk about the bank's performance in Tanzania. So the half-year results for 2022, StanChart Bank was slated as the third most profitable bank in Tanzania, which it's a positive result for the bank. But then, of course, now when people hear that the bank is exiting some of the markets, it becomes, how come it's making profit in them. Now let us look at the areas of profitability which you've mentioned. Corporate and consumer business provides the margin, the bigger margin of the profits for the bank. Now moving forward, as the year keeps on progressing, how are the prospects in terms of performance of the bank, and what are your projections when we reach the end of 2022?
Okay. Good question. The bank has done very well year to date against our own ambitions that we set for 2022, but more so exceptionally well compared to 2021, which we call the year on year. We are happy about the position that we occupy in the market. I think it makes a lot of people, a lot of stakeholders. But for me, I would like to draw the attention to what leads to those results. Okay? By the time we're able to become number 3, a strong number 3, by the time we're able to increase our year-on-year performance by more than 100%, it is the people that we work with that have led to those results. Okay? It is the innovations, and when you look at the details, there's a lot of work that was done in the financial markets department. Okay? Very good positions taken at the right time that have actually resulted in very good performance for the bank. Then you go to transaction banking. Okay? The cash management, the kind of solutions and innovation and the digital platforms we've provided to our clients have led to very good results and a lot of efficiency coming through. We've got centers of excellence at Standard Chartered Bank. We've got our colleagues sitting in London, Dubai, and Singapore, some in South Africa, who are able to come in and offer state-of-the-art solutions to clients. Those also lead to exceptional performance. And of course, we've got the risk management frameworks, which ensure that impairments, you can make all the money and then lose it at the impairment line. Our impairments have done pretty well this year. So it gives a credit to the risk management frameworks. But we've also got the group, okay? Like I said, our strength in the Africa, Middle East, and Asia, the network. That is due to the capabilities that the group brings, but most importantly, the network that we have. Of course, it also goes to the regulators, okay? The Bank of Tanzania, in terms of the stability in prices, stability in foreign exchange, okay? And then it goes to the government in general, in terms of the environment, that they give hope or kind of confidence to the foreign investors that we actually bring to invest or to lend money to our clients in Tanzania. So there's a lot that goes into that. And if that weren't true, it means that that performance would not have been there, or it would be looking, since you talked about the future, would be looking at a boom and bust. So I'm a lot more proud about what has led to these results, and that is the only thing that will ensure that we continue to perform very well in the future. I'm quite bullish about the prospects in Tanzania.
Okay, so the sustainability is there.
It's very key.
Okay, now let's talk about corporate institutional banking.
Yeah.
As you scale down on one end, that means your focus is going to be now expanding this vertical, which is your strength.
Yeah.
In the current Tanzanian market, what share of the corporate and institutional banking does Standard Chartered boast? And how are you planning now to sort of refine your business model to ensure that you strengthen on this specific scale?
Yeah. Interesting question. It is a difficult one at the same time, because when you talk about the market, we will not be comparing apples and apples. You talk about some oranges, some apples, and some tomatoes and all that. Why do I say that? The way we segment our business is different. The way we segment our clients is actually different. Now, when you ask for the market share of the corporate and institutional banking, that can only be objectively assessed if all of us segmented our clients in the same way. So it is a difficult one. My only belief is that we are a key player in the corporate and institutional banking. What goes into that? We're talking about multinational institutions or multinational companies which are represented in many countries. We're talking about financial institutions. We're talking about the sovereign business. Okay, we've got a very good relationship with the government of Tanzania, and we do a lot of business with them in terms of financing the infrastructure projects in the country, and we've got the appetite to do more. So for me, it is the impact going forward, because I believe there's a lot of potential. There's a lot more to do in the roads infrastructure. There's a lot more to do in mining. Okay, there's a lot more to do in energy, whether we're talking about transmission or we're talking about the LNG. So there is a lot to do, but the most important thing is to have a very good environment so that we continue to provide that bridge between Tanzania and the debt and capital market, international debt and capital markets, because there is appetite, because there's an appetite for Tanzania, and the firm bridge is actually Standard Chartered Bank.
Now, the Bank of Tanzania oftentimes issues the financial assistance to different banks in order to give them that liquidity for them to be able to offer loans at very friendly interest rates to sectors in Tanzania. It could be in agriculture, startups, gender-specific, women. Now, as a bank, has Standard Chartered utilized any of the stimulus packages that are available in the market, not only with the Bank of Tanzania, even with other development or international lenders such as the IFC?
I think the central bank came up with a fund which banks can access for onward lending to impacted clients, but also to kind of invest a lot more to boost agricultural output. Now, specifically for Standard Chartered Bank, our intervention, our participation in that was very limited. We still have pools of liquidity within the bank, which we think can be utilized for funding. One of the biggest advantages we have in this market, or one of the strengths that we have, is actually mobilizing dollar deposits. Okay, so that dollar funding is very critical. Not only do we have to use our balance sheet in Tanzania for our clients, to lend to our clients in foreign currency, but we also have offshore booking locations. We can revert, or we can depend on our group. They've got booking locations. We've got booking locations in Mauritius, in London, in the IFC in Dubai, and other places. So we've done that to do the heavy lifting in some of the projects which have been big, which probably would not have been financed locally. Okay? But in addition to that, we initiate business, we originate some business and sell down to other international financial institutions which have got appetite for Tanzania. So there are a lot of other things there are a lot other pools that we can tap into, but specifically for what you call the stimulus package or the recovery fund for Tanzania, Standard Chartered Bank did not play a major role. We were able to assist our clients with the restructuring of the loans, longer tenors where they were required. And I think when you look at the health of our book, of our portfolio, that has gone pretty well where we are at the moment.
So how do NPLs look like at the moment?
Yeah, they are in the low single digits. So we're very proud. Remember, I talked about the risk framework. That has, we do look at our clients all the way from origination into how they perform and what is it that we need to tweak around the journey so that our clients actually perform well. So we're very proud of how we're performing, and our impairments, loan impairments on that P&L are quite low.
So financial institutions are looked at as a source for funding capital for different businesses in Tanzania. Now, are there any initiatives that are being undertaken by Standard Chartered Bank in Tanzania that are targeting, say, for example, the innovators, the startup? If I am an innovator and I'm looking for capital, is Standard Chartered Bank a financial institution that I can count on to offer that support? And if so, what are the rates in terms of loans, and what is the strategy, what is the process?
Okay. With regard to innovations, with regard to fintechs, but most importantly, I think youth employment and lifting the participation of women, I think is a lot more critical if you are going to get a lot more people out of poverty. Now, when I talk about that, I think I need to put context in terms of how we participate. Okay, we might not participate directly in terms of funding some youth groups, in terms of funding some women groups or whichever, or fintechs for that matter. But what we do is that we provide funding to some other players like MFIs that have got a better scope to support such segments of our clients.
So use intermediaries.
Thank you. You can call them intermediaries. We work with some very big, some big microfinance institutions who give lines of credit, and their stats are looking pretty good. One of them is reaching 200,000 clients, and 80%, 80 to 90% of them are women. Okay, others are able to lend to the youth. They've got better platforms in terms of lending to the youth. So I think for us, we are better off, we are better served going through intermediaries that have got a better scale and a better reach to support such segments of the market.
Okay, so looking at another sector in Tanzania that is growing, there's a lot of appetite for real estate. But the mortgage market, vis-a-vis the role that is played by banks, seems to be quite dismal. And when we talk to the players, the stakeholders, they talk about some of the policies being very inhibitive, which then at the end of the day creates more of a hurdle for the mortgage market. Standard Chartered Bank, now corporate institutional banking, and they were looking at these big players within the real estate sector. How is mortgage part of the strategy that you have? Is there any specific plan to tap into that appetite?
No, another very good question, and we've pondered over this a period of time, and I think our record in some of the markets we do business in the retail space or personal business banking, you find that mortgages actually contribute quite a huge chunk to our portfolios in markets like Hong Kong and Singapore. The dynamics in Tanzania, I think, need to be re-examined, and there are lots of stakeholders who need to calm down, sit down, and talk about the dynamics, the fundamental structural issues to do with mortgage. So it's not a very simple question to answer. When you look at the market, my information, the limited information I have, is that the mortgages contribute quite a small portion of the lending book or portfolio in Tanzania. Now, Thompson, I think you've also got a responsibility here to say, what can you do using the platforms that you have to call all the stakeholders and sit down to look at what the fundamental issues are? And you should be able, why is it that we are not able to attract property developers that can offer houses or real estate that is affordable? Okay? Because if somebody is going to come and develop houses for $200,000, $300,000 as a project, those, in my understanding, will only be accessible by a very small component of the population. Now, you probably need to be talking about houses in the range of about 60,000, equivalent to about 120. But why is it that we've not attracted people to invest in such houses? Is it the land use patterns? Is it the land ownership policies? I think there are a lot more issues in there. Now, the issue of cost can be addressed, but that, I think, for me, comes in at the tail end, after sorting out the structural issues. Why? And the investors coming in to put money. Not everybody can borrow money to build their own houses. Okay? You probably need somebody who will come up and have scale in terms of the affordable. So if the houses that are being built are going to be in the $150,000 to $300,000 to $200,000, that means you're leaving out a big component of the would-be mortgage takers. So for us, our job is to intermediate, to lend money to the population, but we can only lend it when we know, because it's not our money, it's the client's money. we have to be sure that that money will be brought back. So I think we need to sort out the issues, the fundamental issues. And I think for me, the cost is another thing, because even if you got money that will be borrowed at 10% or even 8%, do you have the stock of houses today? And we are not in the business of building houses. Somebody needs to build the houses, and then for us, we'll fund our clients to buy, okay? Whether 10, 20, 30 years, but those houses should be there. And those houses should be good quality, because that's what will take as collateral. So I think there are fundamental issues, building standards and whatever, enforcement of this and whatever. And I think it's early days for me to understand all the dynamics that have hampered the development of the mortgage market in Tanzania.
Recently, in the financial sector and the telco sector in Tanzania, there's been a lot of conversation, a lot of push and pull about the transaction levies. We understand that the StanChart Bank, along with other banks, have been impacted in one way or another, because you're talking about, now people accessing financial services through mobile, digital access to finances is a big thing. It's a very big prospect for the sector. But then again, now regulations, laws tend to inhibit that growth. How have transaction levies impacted your business? And moving forward, how do you feel as the focus would be in that vertical?
Okay. One, I have to say that we are a law-abiding institution. We follow the laws of the land. And the transaction levies were announced in the budget reading. And I think there was a date, the effective date, I think, if I'm not mistaken, was supposed to be somewhere in the middle of August. Our role was to ensure that we are compliant to the regulations, because that is now revenue collection. So in terms of our participation, I would like to say, I think you'll allow me to say that this has been overtaken by events. The government afterwards came in and reconsidered the levies as they were structured, and I think made pronouncements which led to the reverse of some of the things actually that we had put together. So I think for me, this is something that has been to a large extent resolved, or at least managed by the authorities. Okay, but yes, we're part of the consultative process.
So I just wanted to look at how it impacted your business, because still, even though the government did review some of the rates, there were still some remnants from now the people who are using the consumers of these various services. There were still some remnants that trying to see how can we avert a recurrence of such a similar situation in the future. Now, you as a sector, key sector player, how did this impact your business? And moving forward, what sort of advice would you have in terms of onboarding such services that would impact not only your business, but also how consumers now interact with using your services?
Okay. No, good one. I think from where I sit, and also under the umbrella of the Tanzania Bankers Association, I think our role is to provide information to the authorities. Okay? Because we are consumers of the same services. Don't forget that. Okay? And our clients get impacted. So our role is to give the feedback. Now, when we are consulted, whether during the process before or after, our role is to provide feedback coming from our clients in terms of what they think about this. At the end of the day, we are all working towards financial inclusion. I think the most important thing would be to pull a lot more people into the formal sector, okay? And then for us, then as banks or financial institutions, then we've got a bigger pot to intermediate. And that brings down the cost of borrowing and all that. And if anything, when you include a lot more people in the financial sector, in the formal sector, then the transmission of the monetary policies are even a lot more effective. So we are just agents, okay? Our clients bring money to us, we intermediate that. At the same time, we're agents or conduits for monetary policy coming from the authorities like the Bank of Tanzania. So in this, when our clients feel that they're impacted by the charges, our role is, number one, we have to comply because we didn't come up with this. But two, to give feedback when we are consulted. And I think for me, the developments that came through thereafter then did resolve some of the issues that we had in the market.
Okay. Mr. Kasekende, it's been a pleasure.
Thank you.
We'll continue interacting because the Citizen is a business paper, so as StanChart Bank, you're great stakeholders. So until next time.
Thank you.
You were with
Much
me,
appreciated.
Thompson. It was the Citizen exclusive. Until next time, bye-bye.
Mateso, nimepigwa faini sababu ya bima kuisha. Hukunikumbusha, lazima unirudishie hii faini.
Pole, ila nilikukumbusha kwa SMS. Itakuwa network yako mbovu. Unanilaumu bure.
Wewe Mateso, kitambi chako hakiishiwi visingizio. Uzembe wako isiwe kero kwangu. Nahitaji bima sasa hivi.
Jioni hii niko mbali. Inaweza kuwa ngumu. Au tufanye kesho.
Mama, tusimsubiri atatuchelewesha. Acha nikununulie bima sasa hivi kwenye WhatsApp tuondoke.
Kwenye WhatsApp hii?
Yes. Si unaela kwenye simu?
Ndio, za kutosha. Inaniambia niweke namba ya siri. Salome, una uhakika niendelee?
Endelea.
Tumia bima pap kwa kupiga *150*51 au kwa WhatsApp 0764166066 ujipatie bima.
Kweli penye nia kuna njia. Nimeipata bima inasomeka halali. Kwa ujanja huu, isijekaa umechukua pesa zangu.
Mama jamani, kuna shida mwanao kufurahia raha yako kidogo?
Bima pap. Urahisi wa maisha.